What is up, AD traders? This is Munya and welcome back to my channel. So today I want to teach about a very important aspect in trading, which is candlestick patterns and candlestick strategies. I've actually realized that most people ignore these candlesticks. They don't even know what these candlesticks mean, right? So today we're going to dive deep into how you can actually use candlesticks to know what is about to happen in the market, to know when to buy, to know when to sell, and to know when to exit the market, right? So this is going to be a little bit of a series of videos that we'll be doing each and every Friday. So make sure you're subscribed, you've turned on a notification bell so that you're notified each and every time I post a video, right? You can also join our trading community, that is our Telegram channel, and follow me on Instagram. The links are down below, right? So let's get into today's business. Today's business is candlestick patterns, right? But for you to get a deeper understanding on candlestick patterns, you need to be able to do, you need to be able to identify the trend. So we're gonna start off from how to identify the trend, right? So there are two ways in which you can actually identify the trend. The first method is called by using level counts, right? We all know that the market moves in 3 levels, right? We have level 3, level 1, and back to level 3. We have level 3, level 1, level 2, and then back to level 3, right? So we all know that the market moves in impulses, right? But how do you actually identify the trend? So today I'm going to teach you one way of identifying a trend, which is called price action. So basically our trend looks like this. We have an uptrend which starts from the bottom. We have an uptrend which starts from the bottom like this. We have our first push, we have a retracement, we have our impulse, we have a retracement, and then we have the final peak, right? This is an uptrend. So I'm just going to put an arrow and say this is an uptrend. We also have what is called a downtrend, which is basically a mirror of this, where we are starting from our peak, our M formation, our push, our stop hunt, our impulse. Remember, stop hunt and the retracement are basically the same thing. We have our second stop hunt, and then we have our impulse, and then we have our lower peak, right? So how do you know that when you are trading, or how do you know when you look at the charts, how do you know that this is an uptrend or this is a downtrend, right? What happens is, I'll start off with the, so this is the downtrend one, this is the uptrend one. So how do you know that I'm in an uptrend, right? When we start off here, this is called a low. From a low, if you go to a high, you should now start to consider that you're in an uptrend. From a low, if you go to a high, you should start to consider that you're in an uptrend, right? From a high, you should expect to have what is called a higher low. I'm sure some of you guys have seen this. From a higher low, you should also expect to reach a higher high. Now it's confirmed that you are in an uptrend because you broke the previous high and you reach to the higher high. From a higher high, again, you come to a higher low. They usually call it higher low number 2, but we just call it 1 because this is the first one. This will be the second one. And then from a higher low, you should get to a high again. This is the structure of an uptrend. This is the structure of an uptrend. Okay. The same happens, but in a mirror way or in an opposite way. You start from a high if you're now going into a downtrend, and from a high you get to what is called a low. From a low this time you now get to a lower high. I hope you can understand this. From a lower high you now get to a lower low. This is now a confirmed downtrend. From a lower high you get, from a lower low, the double L is lower low, then you get to another lower high number 2, and then from a lower high again, obviously this is a low. just like the same low. This is a high, just like the same high. So this is the structure of an uptrend and a downtrend, right? This is the structure of an uptrend and a downtrend. But this is not our topic today. I just want you to have this picture in mind because it's going to be very important when we're now talking about the candlesticks, because each and every candlestick that you see in the chart has a meaning. And for you to get that meaning, you should know the position of that candlestick. Is it at a high? Is it at a lower high? Or is it at a lower low? Or is it at a higher low? You should be able to know where it is exactly on your charts, so that you have the full meaning, the full psychology of that candlestick. Okay, so now let's talk about the candlesticks that are important. Yes, so the important reversal candlestick that we're going to talk about today, I mean by just 4. There are so many of them. We'll continue in other videos, right? But the 4 important ones that I'm going to discuss today are going to be the engulfing bar. We're going to have the shooting star and the hammer. We're going to have the tweezers, and we are going to discuss about the morning star and the evening star. Okay. So starting off with number 1, the engulfing bar. There are 2 types of engulfing bars that we actually have in the market. We're going to get to examples on actual examples on derivative after this, and we're going to open our charts and actually identify these candlesticks, right? So relax, don't worry about them. It might be confusing now, but when we get to the charts, you are going to see, right? So there are 2 types of engulfing bars that we have. We have one which is called the bullish engulfing. So I'm just going to call it the bullish. Oh, my writing is very bad. Going to have something which is called, okay, my thickness is just too much. Okay, going to have a bullish engulfing bar. So I'm just going to call it B, then E for engulfing, then B for bar, right? What is this candlestick pattern, right? So basically, it consists of 2 candlesticks. The bullish engulfing bar consists of 2 candlesticks. The first one is a small bullish, it's a small bearish, sorry, it's a small bearish. I'm just going to color the bearish candlesticks inside so that you know the bearish from the bullish one. So this is a bearish candlestick, and comes the bullish engulfing bar. So basically, it's called the bullish engulfing bar because it has got this big bullish candlestick right next to a small bearish candlestick. This is what is called a bullish engulfing bar. So what does it tell us? Basically, remember the market structures that I talked about earlier, which is your uptrend and your downtrend. Basically, you get this type of candlestick, or you should look for this type of candlesticks when you are in a downtrend. You are in your downtrend, right? Look for this type of candlestick at the bottom here. Why? Because this candlestick pattern basically tells us that the sellers are no longer in control of the market and the buyers are now starting to get in. That's why we have this big bullish candlestick that is next to a small candlestick. It basically tells us that the sellers are no longer in control of the market and the buyers are now starting to kick in. So the only way to know that the sellers were in control of the market is if we were in a downtrend. So basically, look for this candlestick pattern right at the bottom here of a downtrend. This is why we did the market structure at the beginning of the video, so that you actually can be able to identify where you are in the market, right? So once you see this forming down there, press your buy trades because the market is going to start shooting up. The market is going to start shooting up, right? The next pairing candlestick that moves, candlestick pattern that's opposite to the bullish engulfing is obviously the bearish engulfing. So I'm just going to call it the BR for bearish, and then BREB, just to have this difference. Hey, part of my writings, guys. My writings are so bad. It's very difficult to control this. So this is the bearish engulfing bar. So basically it's the opposite of the bullish one. So you would expect to have a small candlestick. This is the structure. Expect to have a small candlestick, which is bullish, by the way. Small candlestick, which is bullish. Let me redraw this nicely. A small bullish candlestick like this. And of course, you want to have a big what? You want to have a big bearish. So the colored ones will be the bearish candlesticks, then the white ones. Right. Again, where do you expect to see this type of candlestick? So you're not going to just look for it everywhere. No, you're going to look at it at key price levels, at important levels, at important psychological levels, right? And where are those psychological levels? For this one, since it's the opposite, you're obviously going to look for it at the top, right? You're obviously going to look for it at the top right here. This is where it's going to be formed. This is when the market is about to reverse. So you'll be in an uptrend, and when you see this candlestick, again, for it to be easy for you to remember the bullish and the bearish. The bearish just has this big dump, which indicates that you are going to sell, right? Which means you should be in an uptrend and not changing. Remember, these are reversal. So you should be in an uptrend and you're not changing direction, right? As easy as that. So again, we look at this and the charts so that you actually see these candlesticks. Okay, so basically the bearish engulfing bar tells us that the buyers were in control. This is why we have this first bullish candlestick, and then the sellers kicked in. This is why we expect it to happen at the peak where we are about to go down. Right? So we're done with the engulfing bars. We're done with the engulfing bars. Let's get into the next candlestick pattern, which is very, very important. Let's get into the next candlestick pattern, which is very important, which is the hammer and the shooting star. So number 2, we want to talk about the hammer. So I'm just going to write H for hammer and then S for the shooting star. This is number 2. So the structure of the hammer is basically something like this. The structure of the hammer is basically something like this. Or since our market is not that perfect, you would also see something like this. A small top wick and a long bottom wick. This is still the hammer, right? It's bullish. Don't forget that it's bullish, and it indicates basically there's a bullish rejection from the buyers and their intention to push the market higher. What do I mean by that? You expect this type of candlestick pattern to occur at the bottom of a downtrend. Again, you expect for the market to occur to occur at the lows. So remember the lows, the lower lows, or just the lows on themselves, right? Why? Because we are saying this long wick is caused by the bulls rejecting this downward movement that had happened. Remember, these wicks show that this is where price was once. This is tracking where price moved. So we can see these long wicks because sellers were trying to push the market down, but there was a bullish rejection. That's why we ended up closing at the top right there. So basically, you expect this to happen here because this is when we would have experienced not reverse drawing. the peak formations. This is when we would have experienced this downward push, and it's about to reverse. So if you see a hammer like that, just know that we're now pushing up. The opposite now is what is called a shooting star. Basically, it's something like this, or is basically a bearish rejection. Again, I said the market can be very funny and pop something like this. It's still the same, but this time this one has to be colored to be bearish. It's colored indicating that it's bearish, right? Don't mind my drawings. It's colored indicating that it's bearish. So basically, it is the opposite. We're basically saying that we expect this type of candlestick at the top of an uptrend, right? So we'll be moving up, nicely up, and then we reach this shooting star. Then obviously we now expect the market to start falling, start going down. Why? Because these bulls tried to push the market all the way up but failed, and then there was the rejection, which caused us to close right here at the bottom, indicating a reversal from an uptrend. So once again, you have to first identify your uptrend and look for these candlestick patterns. Okay. Right, so we're done with the hammer and the shooting star, right? So I'm just going to throw in a bonus candlestick. It's not a candlestick pattern as such, but it's just an important candlestick that one should know from the very beginning, which is the doji. The doji candlestick is basically, my drawing is too bad. The doji candlestick is basically doji like this. The doji candlestick is basically an indecision candlestick, which either looks like this. This is too much. Yeah, basically looks like this, or it looks something close to this, which is something like small body right here, right? So basically here on the doji, the open price and the close price of the candlestick are at the same position. This indicates indecision in the market. The market is not going up or it's not going down. Usually, if this happens, anything can happen. Anything can happen in the market. So it's called an indecision candlestick, or it can have the open price and the close price very much close to each other. Can you see that the gap is so little? Basically, again, we're talking about an indecision, right, in the market. So that's just a bonus candlestick that you should be on the lookout on. Once you see that, it's either you leave the market or a reversal is about to happen, right? But basically, you should know that there's indecision in the market, right? So moving on to tweezers or railway tracks. So basically, this candlestick pattern is comprised of two. Again, we have the tweezer bottom. I'll just call it TB, and then we have the tweezer top. I'll just call it TT. So, what is the structure or the pattern of the tweezer bottom? Basically, we have candlesticks of equal size, right? For the tweezer bottom, we have the first candlestick as bearish. This is the tweezer bottom. The first candlestick is bearish. Can have a small wick. They can both have small wicks like this or no wicks at all. So can you see that they look like a railway track? Can you see? They look like a railway track. So that's why sometimes they're called railway tracks, because they are usually equal or almost equal, right? So the tweezer bottom starts with the bearish candlestick first and then the bullish candlestick first, right? And from the word bottom, obviously it occurs at the what? At the bottom of the trend right here. So this is where you should expect tweezer bottom to occur, and basically indicates that buyers are now taking over the market, right? The opposite again is a tweezer top, which basically starts with a bullish candlestick followed by a bearish candlestick of equal size. The bearish is following equal size. Again, it looks like a railway, and it occurs where? At the top, right here. At the top of the trend, this is where you expect, and basically after that, it indicates that the market is about to go down because sellers are now kicking in the market. Okay, so we're done with tweezers. They're as simple as that. We're going to look at live of examples on the chart. So we're done with relay tracks. Now we're left with the morning and evening star. So the morning star, which I'll call MS, then the evening star, which I'll call ES. Right. So the morning star, its structure is simple. We start off with the bearish. We start off with the bearish candlestick. We start off with a nice bearish candlestick here. Maybe a small wick right there. Small wick right there. I want to paint it to indicate that it's bearish. Something like that. And then it's comprised of three candlesticks, unlike all the other ones. This one is comprised of three candlesticks. And then right here, we have a small, either bullish or a bearish candlestick. It does not matter either on the morning star or on the evening star. And then the third candlestick as well also matters, which is a bullish candlestick. If it's a morning star, right? Which is a bullish candlestick. It's a morning star. So we say this one does not matter whether it's bullish or bearish. It can even be a doji right here, because basically its job is to represent indecision in the market, right? And then we have our bullish candlestick right here. So this is how the morning star looks like. We have a bearish candlestick, we have a small candlestick, which can either be a doji or a very small candlestick, which can be bullish or bearish, and then we have a bullish candlestick. So basically this occurs where? At the bottom of the trend. Why? Because we are looking for the market to make a U-turn and go up like that, right? So basically the first candle has to be bearish, indicating that the sellers are still in control since we're in a downtrend, right? Indicating that sellers are still in control since we're in a downtrend. Then we get to a point where there is now indecision, which is the small candlestick, which can be a doji or a small candlestick. And then there's now decision, which is this bullish candlestick. Then we start going up, right? I hope you understood that. So this second candlestick can be either bearish, can even color it, or it can be bullish, or it can be a doji, right? But it has to be small, way smaller than these other two. These are the two. If it's a morning star, you have to start with the bearish. The evening star, you have to start with the bullish, right? So for the evening star, basically it's the opposite. We start off with the bullish candlestick. We have our small candlestick. I'll put a doji this time here so that you remember. We have our small candlestick. We have our doji, and then we have our bearish candlestick right here. We have our bearish candlestick right here. Okay, so basically you are coming from an uptrend, you get to an indecision where the market is just flat or not, or consolidating, and then you get into a downtrend. So basically the evening star happens at the top of an uptrend, right, where we will be pushing the market up, and then we encounter the evening star, and then the market starts to drop since the reversal candlestick. All right, so now let's jump into examples of these four candlesticks that I've talked about and actually see how they can help you in trading. Okay. All right, guys, now we are on the live charts, and I already highlighted what we're going to be discussing about, and let's take a look at the actual examples of where all those patterns that I was talking about really come to place. So we talked about what is called the hammer, right? And we say the hammer occurs when The hammer occurs when we are in a downtrend, right? Basically, when we are breaking lower lows, right? And you're in a downtrend, and then we expect a hammer, and then when you see a hammer candlestick, which is basically this candlestick that we have right here from the downtrend, can you see what then happened? The market then pushed up. This is boom 500 that we are looking at, and we are just using candlestick patterns only. There's nothing else, just candlestick patterns. Can you see? With the hammer, we said if you're in a downtrend, at the bottom of a downtrend, if you see this hammer, then there's a reversal which is about to happen. And then can you see what then happened right there? Market pushed up, right? So of course you have to know some of the techniques. This is what I teach in my mentorship. You can also come and join it. But just using these patterns, you can actually get a picture of what is happening, right? Right here, we have a what do we call it? A morning star. No, we have an evening star because we're at the top, right? This is an evening star that we have here. Where is my arrow pointing? We have an evening star right here. Why? Because we have this big bullish candlestick, then we have a small candlestick, and then we have another big bearish candlestick. And then can you see what happens to our evening star? We said our evening star happens at an uptrend. Remember, we're in an uptrend, and then we see this candlestick pattern, which is basically a reversal. Can you see what happened? So it's important that you actually understand and know your position in the market. Don't just look for these evening stars during the middle of a trend or just anywhere, or at the bottom of a trend, then you look for an evening star. It doesn't make that way. You should remember those market structures that I talked about. You can use with the market maker to actually get market structures, or you can use price action, which is what I taught today, where you get to know your higher highs and your higher lows, right? Again, we have a nice evening star right here. Where are my arrows pointing? We have a nice evening star right here. It was also confirmed with the shooting star. Can you see this is the shooting star right at the middle there? It's also confirmed. So you were supposed to sell hard at this position. There was no point for you to miss this position. Just using candlestick patterns. I'm on a 15-minute time frame. Candlestick patterns work on each and every time frame. But for boom and crash, try to use it from the 15-minute time frame, because that's where you see proper candlestick formation, right? So for boom and crash, use it from 15-minute time frame onwards up to 1 month time frame. But for other indices, even the 1 minute time frame, for forex pairs, even the 1 minute time frame, you can use these candlestick patterns, right? We have another one. We have some railway tracks right here. We have some railway tracks right here, and this is what? This is a tweezer top. It's a tweezer top. Why? Because we're in an uptrend, then we see something like this. Basically means sellers are kicking in, right? Can you see you could have capitalized on this nice short sell that happened in the market. Right here again, we have an important market structure. We have the hammer. We have the hammer right here. We have the hammer right here. We have the hammer. And in conjunction of this hammer, you can take this as a whole and take it as a morning star. Why? Because there was this downward push that we're in, and then we started to, and then we had the reversal morning star candlestick, which then pushed up. So you can actually consider this as the morning star, or you can just look at this middle candlestick, which is the hammer, and actually know that we are about to reverse to an uptrend. So can you see the advantage of having this vast amount of information? You can use what is called confluence trading, where you join this knowledge from this side, and you get a perfect engine. So people who knew about the morning star and the hammer actually see what was happening here. people who knew about price action could actually see that we are going to experience a bounce. Since we experience a bounce here, a bounce here, a bounce here, and again bounce here was obvious, but it was also confirmed by a morning star, right? So maybe let's look at crash 1000 and see. Okay, on crash 1000 we had a nice morning star right here, with a nice morning star, because we had a big bearish candlestick with a small candlestick with a small body, and then we had a bullish one. Then can you see? And at the same time, we're coming from a downtrend, right? So the morning star should okay at the bottom of a downtrend, which it did, and then it went up. This is crash 1000. Would have maximized this if we knew about the morning star, right? We would have maximized this if we knew about the morning star. And then right here we have a nice engulfing candlestick. This is a bearish engulfing candlestick. Basically it tells that the buyers are no longer in control. Can you see that from this point to this point the buyers were in control of the market? But once this engulfing candlestick, where we have our small candlestick, our small bullish candlestick, and then the bearish, can you see that the market started to topple down, right? So you would have also maximized on that. I think some of these examples you can actually search for them on your own. The engulfings, the shooting stars, the tweezers. Just try and practice this and see where they okay and what happens after they okay, so that you'll actually know that no, there's an actual psychology behind this. There's an actual story being told by these kind of things. They are not just there. They're actually telling a very big story, right? So if you like these videos, please click the like button, share with your friends, share in other groups. Let this grow. I said we're going to continue. We're going to dive deeper. Remember, I told you in the previous videos that I published in the last 3 or 4 days. I told you that I was researching, we're doing deeper knowledge. So more is to come. Click the subscribe button, turn on notification bell so that you're notified each and every time I post a video. Till next time.